Thank you for joining us for a live webinar on Smart Money Insight. This is Eric, Sales Director with Philip Nova. In today's webinar, we'll be discussing the outlook for Singapore market, and we'll probably look at some interesting stocks to look out for. Before we begin, I would like to do a sound check. If you can hear me loud and clear, please type yes in the question box. Also, during the webinar, if you have any questions, do type them into the question box and I will address them during the Q&A session at the end of the webinar. Yeah, great. Looks like everyone can hear me clearly. So let's begin tonight's webinar. Please find attach this disclaimer. Just take note that you're going to see some slides and examples, and they are for the educational purpose only. A quick introduction of myself. I joined Philip in 2004. Currently sales director with Philip Nova. Philip Nova is an arm of Philip Securities. We started off dealing with futures and forex, and now we are multi-assets driven. I have more than 20 years of experience in this industry, so I often conduct webinars and also share some of my ideas with my clients. Just take note of the presentation scope for today. So these are the rough guidelines what we're going to go through for today. Yeah, so let's get started. Before we continue with the main topic for today, which is a look into smart money strategies, we will want firstly to look at the economic outlook of Singapore and also how we can make use of certain economic data to help us in plotting our route forward in terms of investing in the Singapore stocks or the Singapore stock index in futures like the MSCI Singapore. Okay, so one common measure of the strength of the economy is, of course, the GDP, which stands for Gross Domestic Product. So there are typically three approaches when it comes to understanding or calculating the GDP of a nation or country. So there's a production approach, the expenditure approach, and also the income approach. So the main approach that Singapore uses is the production approach. So typically, the Singapore government, which is the state board that do the calculation or do the compilation and presentation of the GDP result, is the MTI, the Ministry of Trade and Industry. So they will look at the various industry, various sectors that businesses dwells in, and they will then do a calculation on the aggregate value of goods and services produced. And at the end of the year, they will then be able to report. In fact, every quarterly, they will do a calculation on the quarterly performance. And at the end of the year, they will then report on the end of the year performance. So in fact, Singapore did quite well. If you have come across the recent news, last year we grew the economy by 4.4%. So this is the breakdown of the various sectors and industries to which the whole economy is being broken up into. So you can have a good look at how different sectors perform. In fact, if you were to go into the website by SingStat, in it there is a video being produced by them to sort of explain how by incorporating various industry in the Singapore economy, they are able to diversify and sort of ensure that the economy had a more smooth sailing growth rather than to be too overly dependent on a single industry and end up being very volatile. This is the result of the GDP growth since 2010 until 2024. So at the top part is the calculation, the reported GDP, and at the bottom is growth rate, and in particular the real GDP growth rate. By real growth rate, basically what they are saying is that these rates here shown factor will take into consideration the inflation rate. So take for example, from the year 2023 to 2024, the GDP grew from 678 billion to 731 billion. If you were to do a quick calculation, you will see that the growth rate is actually 7 point something percent. Yet the reported real GDP growth rate is 4.4% because the 7% minus off the inflation, then you will get the actual real GDP growth rate, right? So that is good. So you can see that for the last 14 or 15 years, the Singapore economy has been basically growing, and their growth is able to make provision for the inflation. And so apart from the year 2020, every year there is a real growth. So of course 2020 is a special year. We know what happened, and due to that there is uh, negative growth, real growth for that year. Right. So how can we then use this economic data? GDP is good to know, right? But how can we actually use it in our investment as investors? Um, because it just tells us what happened last year. It tells us what happened one quarter. In fact, uh, only in 1 month after uh, 2024 has passed, then we receive a report on how the entire year performed last year. So it's really a very lagging indicator. And how can we make use of this lagging indicator to help us chart the way forward? Okay, so again, in fact, a lot of the slides I'm going to show later on is taken out from the thinkstack.gov.sg. Very interesting website. I really encourage you to go. Very nice infographics. They really put in a lot of effort in doing it. So you can go and take a look and to get a sense of how the economy is doing. Right, so again, it shows here the GDP for 2024 and GDP per capita, meaning for each citizen, what is the GDP rate like, and the real GDP growth of 4.4% for last year. Right, so this chart here shows a comparison of Straits Times Index in black when you lay them side by side with the GDP, the real GDP annualized growth rate, right? So we can see, okay, all this the data, each data point is on a 3 monthly basis because the GDP data is announced on the 3 monthly on a quarterly basis. So we need to compare like to like. So one very clear takeaway we can from this chart here is that you can see that give me a minute let me okay, you can see that whenever there's a dip in the GDP, right, the total line, horizontal line here is 0. So whenever the GDP goes to negative growth, the real GDP goes to negative growth, right, the dip here coincide with the dip in the Straits Times Index. So even though GDP is a lagging indicator, but at least what we can take away from here is that this indicator actually is quite in line with what the market performance is, right? For theoretical knowledge reason. So how then can we use this information, right, for our investment purpose? Okay, GDP is of course the most commonly looked at reported piece of economic indicator, economic data, but in fact the government, the MTI, they basically don't just look at GDP alone. So there's these two indicators that they look at, which is very interesting. Okay, one is called the Singapore Composite Coincident Indicators. So in it, you can see that the composite GDP is one of it. So apart from GDP, you have the other information like the industrial production, like total employment, so on and so forth, right? But this is another indicator I want you to pay attention to. Is called the Singapore Composite Leading Indicators. So in some other website or some other software, they call it the leading economic indicators. So there are more data points into it, right? Apart from GDP, you got money supply, you got stock exchange, and so on and so forth. So is this a leading indicator that we can actually make use of to sort of give us a glimpse of what the futures will bring, right? So this is research done by the MTI. And they in fact, since 1985, when they first studied into this, they realized that this CLI, which is the leading indicator, and the CCI, which is the composite coincidental indicator, very much give us a glimpse, give us an idea of how the economy is. So when it's not doing well, so many times it coincide and then with a period of recession. So during this period of recession, from 2010 to 2012 is the European debt crisis. Then somewhere in between in the 2015 is the China economic slowdown. Then of course we have the COVID-19 in early 2020s. But very interestingly, they found out through the research that this leading indicator CRI actually they is able to give us forewarning, right? It peaks between 2 months to about 2 months to about 9 months before the economy, the recession comes, right? So it will give us a early indication, right? So on average, it's about 3 months ahead, right? Before the economy actually reverse. So we know just now through the previous slide that the GDP growth rate is very much in line with the STI. So can you imagine that if you were to know this beforehand, right? If you were to know this bottom beforehand, you were to know this peak beforehand, 3 to 7 to 8 months beforehand, then you will sort of be able to get ready to be prepared when the market will be peakish and when the market will bottom, right? So over here, again, I lay out these two indicators together. Firstly, the black one is the STI, and the blue one is the Singapore leading economy indicator. So again, we can see that they move very much in tandem together. So even though this leading economy indicator was also announced on the quarterly basis, but by the fact that it actually uh, is leading the economy 3 months ahead. So meaning to say that every time we receive a particular point in data, we saw that there's a peak forming or we see that there's a bottom forming, then it very much gives us an indicator about 3 to 6 months before the STI or the stock index actually forms the top and the bottom. So we can improve this even more by using a medical formula to detrend it, right? So similarly over here, you have the comparison of the black line, the Straits Times Index, and the orange line is actually the leading economic indicator, but being the trend. The trend means that we remove the trend and we are only interested to find out its top and its bottom, right? So we are interested to find out where is peaking and where it is bottoming. In especially realize that the bottom is pretty good indication in spotting out a buy point for the Straits Times Index. So is to say, whenever you see that the orange line, which is the leading indicator being the trend, falls below the horizontal green line, right? So for those who are familiar with technical analysis, this is very much like the stochastic index, stochastic indicator, right? So it give us a oversold region, or meaning a buy point, and then a sell point. But the sell point don't is not as consistent in picking out the sell signal as compared to the buy point. So you can see in comparison, every time it bottoms up, uh, this is a region whereby the Straits Times Index will bottom as well. So it happened in 2001, in '09, in 2016, in 2020, and also just recently, right, just last year in January 2024, you also falls to the buy zone. So even though you're looking at the STI, there is really not much a correction, but this buy zone sort of spark off the bull run, and we have one of the best performing year for the Straits Times Index, maybe since the past decade, right? So why is this good? Because take note that this is taken from an economic indicator. So my theory or my understanding is that um, the the different ministries, right, in charge, the Ministry of Finance, Ministry of Trade and Industry, who are in charge of stimulating the Singapore economy, they will be looking at these indicators, the leading indicator, economic indicator, and the composite or consider indicator as a guide. So whenever these indicators are like not doing well or perform or coming down or going flat, then they will need to adjust the policy, various policies to sort of to spur the economy so that the Singapore economy can start growing again. So that is why even as investor, when we look at indicators, economic indicators, we need not be just looking at it as a point of like what happened in the past, but we can also make use of this leading indicator that the MTI has developed, and then to apply some technical analysis methodology into it to solve to make this information useful to us to pick up buy and sell point, right? So for now, I would say that this, even though it has bottomed up, right, but this leading indicator seems to show that there is more upside to come. At the very least, we know that it is not peakish. So maybe for the next 2 to 3 quarters, we can watch out and see how this indicator perform, right? If the indicator continues to point upwards and is not reaching out to the peakish region, then there is still more room for the STI and as a whole, or the Singapore market as a whole, to go, right? So next, for market trends, um, in probably about 2 weeks ago, the MTI issued a report on the Singapore GDP. So you can scan this QR code to download the full report. It's probably about 7-8 pages, but it's don't worry, it's not very wordy or lengthy. In fact, it's quite easy to read, and it's quite straightforward, right? No very difficult jargons, right? So in this report, they gave a report of how the economy is, and they gave a forecast for 2025. So in 2025, they're expecting the economy to grow about 1 to 3%. And so in their report, they also indicated their outlook for 2025 and which sectors they think will continue to perform or will outperform this year. So I'm just going to go through this and use this as a basis to look into the stocks that falls into those sectors that MTI mentioned. So in this paragraph, it mentioned that the manufacturing and trade-related service sector is expected to continue to expand in 2025. And in particular, they highlight electronic sector is projected to expand at a steady pace, supported by robust demand for semiconductors chips. And also mentioned that the spillover effects on the precision engineering cluster, machinery, equipment, and supply segment. And also they mentioned that there's a strong order books in aerospace and marine and offshore engineering segments. So based on these sectors that are being mentioned, I then highlighted out a few stocks: Citrum, ST Engineering, Rex, UMS, and SIA Engineering. And later we can take a closer look at each of them. Okay, the next paragraph, they also mention about information and communications, and also in the finance sector, that these will continue to project and register a healthy growth. So these are the stocks that falls within this sector. We have Singtel, UOB, OCBC, and DBS. And then lastly, they just give a little bit of warning. They say that the growth of consumer-facing sectors, retail trade, and the F&B services are likely to remain lackluster. So weighed down in part by locals shifting their spending overseas, all right? So more and more, because of the strong Singapore dollars, more and more spending to go overseas, either across the causeway to JB or on those longer holidays to travel to other countries, right, to spend over there. Of course, they do mention that the continued recovery in the international visitor arrivals will help to support these sectors as well. So some of the stocks mentioned that will fall under this category will be Dairy Farm, or rather the counter name now is called changed to DFI Retail. And then we have Genting Singapore and also Sheng Siong. Right. So next, I'm going to look into the main topic of today, which is the smart money investment strategies. Okay, so maybe this will go hand in hand. I send out this smart money report to my clients on a weekly basis. So this QR code, you can scan this QR code to download this report, the report for week 2 of February 2025, which was sent out last week. And this week I will be sending out the week 3 February 2025 report to my clients. So I every week I send out 2 versions, the STI version and the full version. So today, to thank you for participating in my webinar, I have opened up this full version for download. So the full version is generally only for a selected few of my clients, those who invest in some advisory accounts and also in managed accounts with me. But for all my clients, they will be receiving the STI version. So the difference between the two is that the STI version will only have the 30 STI blue chip stocks and also the smart money charts on the various sectors, the 12 sectors in Singapore. Whereas for the full version, apart from this, they will be also receiving the smart money charts for some mid cap and small caps Singapore stocks, and also on some Malaysian stocks as well. So you can scan this QR code to download the report. Okay, so what is smart money analysis? Okay, over in the next few slides, you're going to see a lot of this chart. They will have the name of the counter we're looking at. For this is Sembcorp Industry, and then followed by the word smart money behind it. So in this chart, you're going to see a blue line and a gray line. Okay, this gray line here is the price of the stocks that we're looking at. So in this example, this is the price of Sembcorp Industry. The blue line is the actions of the smart money. So when the blue line is coming down, it means that the smart money was selling, right? So when the blue line is going up, it means that the smart money were buying, right? So you can see that this chart is actually between the period from 2020 all the way until January 2024. So during this period of time, in fact, the Sembcorp industry performed tremendously by moving up from the low of maybe I think it's around 0.8 something or 0.9 or 90 cents, and all the way until it's close to $6, and now it's just hovering around $5 plus since then. But during this period of 3.5 to 4 years, the Sembcorp industry actually moved up by 600%. And during this period, we also see that the smart money had bought up about 600 million worth of the Sembcorp industry stocks. So there's a very close correlation between the smart money buying or selling and the price of the stock involved. So thereby, this is what this weekly smart money report do, is that to keep my clients informed of what the smart money are doing in some of these stocks in Singapore and also in Malaysia. Okay, so who are the smart money, right? The smart money, they are really the institutional investors. They are the hedge fund, the hedge fund, the fund managers, or the super high net worth individuals who like people who invest for a living, right? They are the professionals investors. So by their buying and selling, they will be able to sort of drive the price of the stock up or down. And why are these smart money? Why is there this money flow going around the world, right? So as I mentioned, these are institutional investor, people who invest for a living, right? So they are not here just to try to earn a little bit, small little percentage here and there. They are here to really grow the wealth of the institution, to grow the wealth of the individual. So, and many of them, they are global investors, right? They are not just investing in one particular country or one particular region. Excuse me. So they really invest across the globe. So their funds will basically flow into wherever that has the least level of resistance. So that level of resistance could be come from geographical reason, or it could be coming from various political reason as well. So, for example, economic forces, like just maybe in 2022 to 2023, we know that this high inflation has caused the Federal Reserve to increase their interest rate rapidly from zero all the way to above 5%. So this rapid increase in the interest rate, the monetary, we call the monetary policy, actually created certain opportunities, and it also created certain hindrances to investment. So this could be these are typically one of the reasons why these smart money or this institutional investor will choose to divert their funds away from places that is charging them a higher interest into countries that they'll be able to enjoy a lower interest rates. So, and of course, now the big news, or not really news, but what is going on around the world right now is, of course, Donald Trump has come back on his second term, and with him, we're going to have a refocus in the trade war. During his first term, the trade war is between U.S. and China, and now in the second term, the trade war is almost with U.S. against the entire world, right? So we're going to have tariffs. There will be a danger of currency war. There will be a danger of reciprocal tariff war as well. So these are what may then create hindrance, and it may also create opportunities to the investors. So other reason will be geopolitical forces. So of course, the last 2 to 3 years, we have the Russia-Ukraine war going on. You have the Israel-Hamas war going on. So, and also last year, there a little bit of tension between in the China-Taiwan Straits. So, and of course, this year, then we may have some of this of going away because of what the political forces in move. So this may create opportunity as well. And lastly, of course, technological trends may also cause there to be a certain shift in investment, right? Probably about a decade ago, the technological trend is in green energy. So you see a lot of the stocks in that sector blossom, and then after that, there is EV, electric vehicle breakthrough. So then, of course, a lot of opportunities, funds moving into that sector. And then the last maybe 2 years, 1.5 to 2 years, we have the AI revolution, sparked off firstly by OpenAI launching of ChatGPT, and then of course we see similar movement in the China stock market when the DeepSeek just released their AI model as well. And of course, apart from all these big macro movement, there's also the business valuation, right? The flow of funds by the institution will always go into businesses that can earn them the most profit, or they can find the deepest value in. So stocks that are trading at a low valuation may be favored. Stocks that may are paying out higher dividends may be favored, or stocks that are able to show great growth, right, coming forward, or their products and services are much coveted after. We also see the investor flowing their funds into them. So, like I said, the AI revolution, we see that the Nvidia has been one of the top performing stock for the last decade. Even up to this year is even with some setback by the DeepSeek announcement, the Nvidia is still relatively performing well, trading quite close to its all-time high. So these are some of the reasons why there will be the flow of funds, flow of this smart money into and out of the stock, into and out of a particular sectors. So how then do we identify potential stocks using the smart money charts? So as I speak, you can just refer to also the smart money, the weekly smart money report that you have downloaded to look at some of the stocks that I'm talking about, and also some of the stocks that are not mentioned but that you are interested in. You can look at them. If you have any questions, you can always drop down on the question box and I'll address them at the end of the webinar. So let's recap again for this sector that MTI highlighted. So firstly, we have the manufacturing, electronics, aerospace, marine and offshore engineering sectors. So these are the stocks mentioned, Citrium, ST Engineering, or rather, these are not the stocks, sorry, these are not the stocks mentioned, but these are some of the stocks that falls within these sectors that I pick up, right? So, and we're going to look at their smart money chart and what they are doing, and how then, and what should we look out for, and how then can we pick up any buying and selling signals out of it. So firstly, we are going to look at Citrium. So this is a Citrium Smart Money chart from January to just maybe one week ago, right? The data points is on a weekly basis. So every single data point collected is on a weekly basis, right? And I also find that looking at this on a daily basis is actually not very helpful because on a daily basis there could be many reasons or why the stock price or whether there's any buying and selling movement. But generally on a weekly basis, any trend, any sustained trend should be visible, right? Rather on a daily basis, they are not as visible, or they get to be more noises in between. So just now I mentioned that the blue line is for smart money. So for the purple line, just take note that the purple line is also for smart money price movement. So it's just that when I first started off, maybe about I colored it in blue, but then there is some change in my methodology of compilation. So therefore, the version 2, which I use for the SCI stocks, uh, I find them to be much more accurate. So I then uh, color it in purple, sort of just to differentiate the difference. But whether blue or purple color, just take note that this color, blue or purple color, is for the smart money actions, and the gray color is the price of the stock itself. So the way to use it, or the way to find a signal out of it, is very similar to technical analysis by looking at trends, by looking at support and resistance. So if you are someone who uses a little bit of chart, you don't need very fanciful charting techniques, just like simple drawing of trend lines, breaking below of trend lines, or picking out a support and resistance level. So if the price breaks the support level, then it means that that there's a sell down, and very much likely that this sell down will continue downward. So the thing I find useful for this, because uh, these are created not by just using a fanciful mathematical formula, but these are actual money involved. When the when the purple line or the blue line is coming down, it meant that there are actually people, investors selling, right, that cause the purple lines to go down. And because given that these are institutional investors, these are hedge funds, these are the fund managers who are doing the selling, their volume or the money involved is definitely going to be much bigger than retail investors like you and I. So therefore, they're going to have a much more outweigh influence in the movement in the price than would be like for several retail investor were to do the same trades, right? So in September 2023, the smart money sold out on Ctrm. So Ctrm was trading at close to $2.70. This is uh, the post corporate consolidation price. So at that point in time, Citron is trading like a penny stock. So until they consolidated 20 to 1. So but the price then after the consolidation price is $2.70, about close to $2.80. So then since then the share price of Citron have been falling for almost a year, and it was only at in September 24, whereby we get a buy signal, whereby we see more sustained buying by the smart money. So therefore, from then onwards, we also be able to see more strength in the share price of Ctrium, moving up from 150 to recent high was about close to $2.60. So we can see the phenomenon or the strong correlation between the smart money chart and that of the share price itself. So as of now, the smart money is still on a sustained uptrend, sustained buying for Ctrium. So yeah, we shall continue to monitor this and see if the buying continues. And the reason why I like to also one of the reasons I like to use this is that these are institutional investors when they do the buying and selling. It's really not a short-term basis, right? It's not just for a couple of days, a couple of weeks, and many a times their action could last for a few months. So when you find a sustained trend, many a times you'll find that this trend will tends to continue, right, in that particular direction, whether up or down. So from just looking at okay, let me go back again. So from just looking at the smart money chart, you can see that there's a sell down in September 23. So many times how I do is that I will then refer to the daily charts to pick up the exact buy and sell point. So I do not encourage short selling stocks because it's generally quite costly. There are a lot of financing costs involved. So the timing got to be very accurate. Otherwise, uh, sometimes even when there's gain, you probably incur into the loss. And also, later you are going to see that there's actually ample opportunities, right? When the smart money is selling on a particular stock, particular sector, many a times they are actually buying in another stock or another sector because they do not just sell and then keep the money in the bank, right? There are investors who they are investing for want them to grow the fund. So when they are sell, they will need to redeploy into another stock, either another stock in Singapore or another stock in another country. But of course, in today's webinar, we are just paying attention to the Singapore stocks only, right? So on this period here, September 2023, there is a sell down of the breaking of the trend line in purple. So we then see Ctrium continue to sell down and continue to form and trade lower, forming a lower high and lower low until it reach a low of around to $1.40. So just to introduce this very interesting indicator, if you have charting software like my trading view or any charting software, you can include this indicator called zigzag, who will be able to just automatically plot for you the wave counts, right? So you can use that to spot out support and resistance level, and also to use that to connect the support level to draw trend lines, right? So then you'll be less ambiguous on where the support is and where the resistance is, because it is done automatically by the software. Right, so apart from just the zigzag indicator, drawing or trend line, another indicator that I like to use is a Bollinger Band. So in this period in September 2024, we see that there's a Bollinger Band squeeze, right, and then a breakout. Bollinger Band is useful because it point out to us periods of time whereby there's a consolidation in the price. If you're going to read on the book by this John Bollinger, the creator of Bollinger Band, so he mentioned in his book that this indicator, or whether this method he called the squeeze, he find it very useful because the squeeze happen when the market is in the period of low volatility. And many a times the low volatility will often lead to high volatility. So, but he do mention in the book itself that um, the the method really does not tell you where the breakout will be. You just say that it's going to be a high volatility breakout, but it can be to the upside or to the downside. So thereby, I realized that, hey, this indicator work quite hand in hand with my smart money charts, because I do know where the breakout is going to be. That is when I see that smart money is buying. So when I see that the smart money is buying and I see that there's a Bollinger squeeze, then I know that there is a very, very high chance that the breakout will be to the upside, because the smart money is buying to the upside. But if the smart money is selling, then I will know that after the squeeze, the higher chance of it will be for the price to break down. So all by combining these two information, the smart money together with the technical analysis. So next, I'm just going to speed up a little bit because a few stocks to cover. So next is ST Engineering. So similarly, we find that since April 23, smart money has been buying. They do a couple of times whereby there are signs that they seems to be selling, but not a very strong sell. So even if I were to take the signal or to sell out to get out of the stock, but very quickly we get a buy signal again, then we will have to get back in, right? So and also one thing to deal with the trading of stocks in this manner is that sometimes you may have to buy the stocks at a high price, right? And now we are looking at this in history, right? From here we know that, oh, the price has broken up, so there's a buy signal. So it's easy for us to look back in history and very objectively tell that there's a buy signal. But whenever we are trading, we are actually trading on the right hand side of the chart. We do not know what is happening, what is going to happen the next few weeks or next few months. So sometimes you may end up having to the signal comes when the price is trading at a high level compared to historical past. So a lot of times um, to be able to do well, right, in the trading game, you must have to be willing to buy at a high price, provided of course there is a fundamental reason to do so. And in this case, we know the fundamental reason to do so, and that is that the smart money was buying. So that will become the reason why that we should buy the stock, even though the price is trading on the high side. So similarly, over here, we can combine the usage of the zigzag line and the Bollinger Band to pick up points whereby there's a breakout in signal, and also at the same time to double check that the smart money have been buying. Then that will give us confidence to invest in the stock. Okay, so this is just similar. You can see that zigzag line is pointing to us. When the uptrend is formed, the uptrend is sustained for a long period of time. So this one is like almost for an entire year. There are period of times there will be correction. In fact, this correction offers an opportunity, right, for those who have missed out on the stock to buy in, right? As long as the correction did not go below the previous low point, then you can uh, give us the investor to continue to add in or join to the stock. And this is of course provided that we see that the smart money is continuing buying, right? So therefore we can buy during the corrective dip. So SIA engineering as well. So another thing to learn from this SIA engineering is that you can notice that this gray line here is sort of range bound, right, going flat. But at the same time, the smart money chart, smart money line, the blue color line is going up. So thereby, this is a period of time whereby we call accumulation, right? So we have share price going sideways, but this the the investor is buying, so the investor is accumulating, right? He need not keep bidding the price higher because there are people, there are some sellers who are offloading the stocks, to allowing the smart investor to buy them at not at a high price, right? So we have this consolidation period from May 2023 to December 2023. Then there's a short up movement of about 20 to 30 cents. And then again, now is again in the consolidation phase since October last year until now. And similar, even though the price is moving sideways, we see that the smart money, the blue color line, is going upward because showing that the smart money is buying, is accumulating on the stock. Okay, so Rex International is an oil and gas play. So since October 23, smart money sold down, right? So you can see that the share price was trading at about 17 cents then. So after the smart money sell down to all the way to around August 2024, so that's like almost about 10 months of selling by the smart money, right? So this time of selling, see the share price of Rex International going down from 17 cents all the way to close to 9 cents. That's almost a 50% drop. So imagine for those who buy here, right, if they just hold on, they will just have to ride out through the entire 1.5 years before the share price goes back up to their original buy point, right? But for an investor who will be referring to this smart money chart, he will know to avoid this period of time, right, from October 23, and only start to pay attention to this stock in August 24. And the major breakthrough really come in November last year, which is just 2 months back, whereby we see a signal of the smart money buying up. And during this period of time is wonderful because even as the smart money is buying up, the share price of this Rex International stay relatively stable, close to 12 cents. Right. So of course, the rest is history. The share price broke up. I think intraday it traded to a high of 23 cents. I think just last week, and then we see a correction, very deep correction, the past 3 to 5 days. We see the share price going. I think today the low was close to 16 cents. But it has since rebounded slightly. And then today, I think it closed at 18 cents. So if I were to look at this counter, I would say that smart money looks to me that it's still buying, right? Even though last week, a heavy sell down last Friday, but as a whole, it looks to be still buying. So this correction may be an opportunity, right, for those who miss out on the run, for those who want to add on more to look at this counter again. Of course, we can always wait for more confirmation, which is wait for another 1 week of data to check out whether is the smart money still buying or not. So, but that do do does comes with it a risk that the share price would have probably may go up again back to 20 cents. So trading is a lot on probability games. So investors and traders will just sometimes have to weigh our pros and cons, weigh our risk and returns potential, and a lot of times just have to, even after all this additional information that we have, sometimes do have to make an educated guess where the direction will be. Okay, so on the daily chart, so again we it can include this Bollinger Band with the zigzag indicator. So this is the period of time whereby I told you that in September 2023 we see that the smart money had been selling. So then we get a signal, like on the chart itself there's a signal to buy. There's a Bollinger Squeeze and a breakout to the upside. And the breakout is still quite a good move, right? It break out at about 172, and it moved up to close to one. It moved to 190. Sorry, it break up at 17.2 cents, and it moved to about 19 cents. So it's a move of like um, um, 1.8 cents, so which is pretty decent percentage wise. But then it's not a sustained move, so it just move up for a while and then it come crashing down. So, but for investors who are paying attention to the smart money chart, right, who reads my report, then of course they will ignore, right? They think that okay, this is a breakout, but I'm going to ignore it because the smart money is was selling. So, of course, then we see that the selling continue until 1 year later, so whereby you are close to August, September last year, then we get again we get a Bollinger Band squeeze, and this time the breakout is legit because we see that hey, the smart money started buying, and then there's a breakout. There's subsequently a correction, right? But the correction did not comes below the low here, so it's still technically considered as an uptrend. And then, of course, as I mentioned, in November, that's when we see the seriousness in the breakout happen because the smart money started buying and the share price continued to stay flat, but the smart money continued buying, thereby giving investors ample opportunities to load up on the stock to join the investment. Of course, for those who want to have indicator timing tool, then we get the final confirmation in early this year when we see that the price start breaking up and then start moving to the upside. Next is UMS. So UMS similarly, there used to be an uptrend in 2023. This is one of the stocks that I always look at, and then since early last year until now, right, there hasn't been much a signal until recently. Then we start seeing smart money seems to show interest in it. It's not a very strong conviction, right? You don't see a high rising blue line, but nevertheless, it looks like there is chance. So this stock is in a sector that MTI mentioned. So I will pay more attention to the stock this year, looking at how and what the smart money is doing. So technically also you can look at, there isn't much to look at the Bollinger Band, so I remove it. But using the zigzag, you'll be able to find out some trading signals, whether breaking of the support and resistance levels. And then now, of course, I'm going to introduce you another indicator. The chart I'm used is from TradingView. So these indicators are all found on TradingView. If you have a TradingView account, you can just include them. So this indicator is called volume profile. It's a gray color histogram on the right side. So basically what this do is that it will plot out for you periods of time whereby in the price itself there is a higher volume. So when you have a longer gray histogram shown here, it meant that during this at this price range of about $1 to 105, there's a lot of trading actions being done, a lot of buying and selling. So that tells us that there are either accumulation or distribution in this price range, meaning that there are people, investors buying a lot or selling a lot, distributing out, throwing out their holdings, right? Trying to clear out their holdings because the price is moving sideways. So it's good for them. If they want to buy at a low price, then they can keep buying at a low price. If they want to sell at this price because they think that the price will go lower, then they can keep selling it without pushing the price down. So though these are periods of accumulation or distribution. So, but looking at the smart money chart, my educated guess is that it seems that there's a strong chance of accumulation because I see that there's some buying, especially towards the later part. There's some buying in the smart on the smart money chart itself. Okay, so next we have the information, communication, and finance. Okay, for Singtel, has been one of the boring stock that apart from those who likes to collect the dividends, most traders will just avoid this stock because it's just going nowhere. But since June last year, the stock has been doing relatively well. In fact, since March, it starts showing a signal when we see smart money started buying. And notice that the buy up, when the smart money buy up, and during period of consolidation or during period where the price is correcting, the sell down is not very heavy. So for whatever funds that has been committed into this stock, right, during this period of when they push up the price, they did not offload it, right? They are still holding on. And in fact, after since Jan, they continue buying such that they continue to hold even more of the Singtel. So from now all the way back to March last year, the smart money had bought up close to $1 billion worth of these Singtel shares, and their money is still in, right? So that shows that they are committed, right? To me, at least it shows to me that they are committed to think that there's more upside to come for the stock, right? That's the only way you uh, invest and keep invested because you think that there is more upside, right? If you think that there's a better opportunity elsewhere, a better stock to deploy your 1 billion into, you would have sold the stock and then put into the other stock. So the only reason why the 1 billion stay committed to it, I think is because they think there's upside. So this do even though it's a boring business, there is do looks like there's an opportunity to come. All right. So similarly, on the daily chart itself, you can see that there's a Bollinger breakout. You can see that the zigzag line is a little bit more erratic, especially during a period of time of correct when there's a consolidation. But nevertheless, you can still very clearly see that it's in the uptrend, forming a higher high and higher low. So of course, one of the main reasons that sparked off the move in this Singtel is because that during last year in the announcement, they actually announced that there's a 52% increase in the dividends that they are committed to pay out. So that is for investors very interested for income stock. Then this just become one of the key stock to hold on to. Another reason is that the growth story that Singtel is going to this AI data space. So yeah, so I think the AI story hasn't ended. So there are more to come. But of course, in this part of the world, we don't get access to any of the high-end chip production. But one thing that we do get access into is that this AI for the AI to develop, they need a lot of data centers. So therefore, in this part of the region, this is one of the key area of growth. Okay, for the bank stocks itself, okay, this chart basically just look at the three banks. Basically, for the bank stock, I find that because of the relatively high weightage in the STI stocks, somehow for the past 2 years, the money flow isn't really as useful, right, as the other stocks in the Singapore market, right? So very much that, but you can always compare it and use it in conjunction with other standard fundamental indicator that we use to study the stock, and that is by looking at the price to book comparison. So one very interesting thing to note of, okay, over here the lines in red is DBS, in yellow is OCBC, and in blue is the UOB. So you can see that for the longest time, the three banks have been moved pretty much in tandem, right? And in fact, I would say is that before 2017, DBS had been one of the lesser performing one, right? But since 2017, you see that the DBS just started outperforming the banks in their valuation and also in the share price performance. So from the money price chart itself, you can't really tell much. In fact, you will see a lot of selling in the DBS and a little bit of buying on the OCBC. And comparatively wise, there are a little bit more buying in the UOB. And the reason really is because if you look back at the valuation of the three chart, DBS has the highest valuation. The PEB is 2 times. OCBC is next at about 1.45 times, and then the UOB is the least at about 1.3 times. So it do make sense, right, if you think about this way, that since these three stocks they move quite in tandem, and you have one that is more highly at a higher traded at a higher valuation, then you will tend to want to redeploy the stock, right, sell it at a high price, and then to buy the other one that is trading at a much lower valuation. So thereby we see this fund money flows thing going on between the three banks. But I would say that when the three bank moves, they generally move together. So if you get a buy signal on the smart money on either of the bank, typically if you, let's say if you see a buy signal here at UOB, but you're interested in buy OCBC, you're interested to buy DBS, we can go ahead to buy it, because you will seldom have a scenario whereby UOB will move, but the DBS and OCBC will not, right? Of course, they may move in slightly different magnitude. So for now, DBS generally move in a higher magnitude than the other two banks. But we won't know for sure how long this will continue, right? Because prior to 2017, it used to be the other way, that or UOB move more than DBS. Right. So, but also another thing to pay attention to is that when we look at the earnings and the return of equity fundamental data, then we also have a better understanding of why the market actually value DBS more. Because DBS actually prior to 2018, the three banks' earnings are pretty similar. But after that, DBS just exit and then start earning more and then the other two banks, and that also resulted in the DBS having a better performance metrics in terms of the ROE, return on equity. Okay, lastly about the bank, I'm just going to say this, that is that if you want to time the bank on when to buy and when to sell, then pay attention to their dividend yield. Over here, I've shown you the period of time whereby when the dividend yield of the stock, any of them, goes above 6%, this is generally a good buy zone, right? So back in early 2024, in fact, towards the end of 2023 to the early 2024, the period of time where the banks are a little bit on the sideway, but you find that after that, when the dividend yields traded above 6%, after that, then the share price started moving up. So back in 2020 as well, you have the traded dividend yield above 6%, and after that, the bank share price start moving. So similarly, we find this as well in 2016 and also 2009. Whenever it goes above, dividend yields above 6%, next the bank share start moving. Okay, so lastly, the MTI asked us to watch out for this sector, F&B and retail trade. So these are a few stocks. Let's look at them. Just incidentally, Walmart reported a very disappointing forecast for 2025, citing worries on consumer spending habits and also like the perhaps this tariff will then affect the market sentiment. So yeah, Walmart is effectively doing the same thing as DFI Retail and Sheng Siong, but of course at a much larger scale and in a different country. But many of the time you see that the trends are very similar. Like US reported high inflation, most like the rest of the world also started reporting high inflation. So when the US inflation start coming down, also the rest of the world inflation start coming down. So we live in really a very globalized world, whereby what happens in one part of the world really more or less have certain impact on the other part of the world as well. So DFI retail, a little bit of buy trend for 3 months from September last quarter last year, but since then yeah, a little bit of selling down by the smart money. So on the charting wise as well, we see that there's a breakout in trend, and over here for any traders who are still holding will probably uh, pay attention to this support of $2.20 and probably a optimal price to cut loss or to get out of this long trade at a smaller profit. But DFI, of course, is not fully Singapore based. In fact, the Singapore operation is probably only about 30% of its entire revenue segment. So perhaps there may be some um, Hong Kong China spin to it, especially Hong Kong market has been doing pretty well for last month. So if their momentum continue, perhaps this will also give some support to DFI. But in the meantime, I'll still pay attention to what the smart money is doing. So as of now, there's no signs of buying. There's only signs of selling. So I do not short. I don't recommend shorting. So I will just put this aside for this year. And also MTI asks us to be more careful about the retail sector. So perhaps this is not the sector to pay too much attention to this year as well. So Sheng Siong, similarly, from last year until early this year or late last year, there had been a little bit of buying. But then since December last year until now, it has mostly been selling. And now the selling by the smart money has crossed below the trend line, the red color trend line. And also another thing that I like to look at for the smart money in comparison to the price chart is the divergence. When I see this, like for example, the share price has go above the previous peak here, but the smart money buying did not go above the previous peak. So I will see this as signs as the buying as lack of conviction. So which is not a good sign for the stock, right? So I will probably be more careful, not be too super excited to buy any technical breakout signal for Sheng Siong. So for Genting, so smart money has been selling since early 2024. So even until now, there's no buy signal at this stock. Even though there's lots of hype in terms of tourist arrival numbers, and last year you have the Swiftonomics, Taylor Swift coming to Singapore, we have Coldplay coming to Singapore, and all these still fail to actually lift up the stock or to lift up this sector. So not too super interested or excited in Genting at the moment. And another thing to look at Genting, right, another spin to it is that we can actually compare Genting with Genting Berhad. Genting Singapore is actually the majority owned by banking Genting Berhad. We all know that it all started off in this Genting in Malaysia. So then, of course, they got the license to operate in Singapore. So over here in the chart, you can see the monthly chart of both Genting. Okay, the candlesticks, the green and red bar is the Genting Singapore chart. The black color one is a Genting Bahasa, right? Genting Berhad. So which is the one listed in Malaysia. But I adjust it for Sing dollars. So because it's traded in Malaysia ringgit, so if you compare a stock in Sing and a stock in ringgit, you can't really compare. So you need to match them in their currencies. So this software, well, allows us to do that. So I can ask them to quote me the price of Genting Berhad in Sing dollars. So when we do that, you can then see that, hey, even though they are operating totally two different casinos or integrated resorts in two different countries, but the share price is very much correlated, right? So over here, this is a chart that shows uh, the breakdown in the revenue by Genting Berhad. We can see that the Singapore portion took up about 30%. The Malaysia portion also took up about 30%. In fact, and then the rest is made up by the operation in other country. So maybe that is the reason why they move so very much in tandem. Partly because it's quite a huge percentage for the Singapore operation in comparison to their Malaysia operation, and also secondly, maybe in this part of the region, the demographics, the trend is pretty much similar. So one way of looking at this is that um, when we want to invest into Genting Singapore, we can also pay attention to what the smart money is doing in Genting Berhad. And I just happen to have the chart in the smart money for Genting Berhad. So, and it's shown here that they have been selling, right, since early last year until now. Smart money is still selling Genting Berhad. So if I were to get any signals to buy Genting Singapore, then apart from looking at a smart money chart for Genting Singapore, I will also pay attention to the smart money chart for Genting Berhad. So if both showing buy, then that will give us a greater assurance that this buying is supported, right, by the smart money. Okay, so come to the end of today's webinar. So thank you for taking your time to listen to me. And then just take note that this promotion going on for those who open an account with me, you will get to receive on a weekly basis this weekly smart money report, the STI version. If you are interested in the full version, you want to know how to get it, you can contact me again. Then I will explain to you more about how to get the full version. But if not, if you are just interested in the SCI stocks, then and this is good enough, you can open the account free of charge by scanning this QR code. And apart from the weekly smart money report, these are the various services I do provide via WhatsApp. My clients can sign up to them. So depending on what stocks you're interested in, Singapore, overseas stocks, or various products like futures and forex, you can just let me know. And whenever I got any interesting ideas or I spot out any opportunities, I will be then sending out to my clients who are subscribed to these various services. This is my contact here. If you've got any questions after today, you can reach out to me, or you're interested to find out more, you can scan this QR code to register for my one-on-one coaching session. Then we can discuss further. Now it's time for Q&A. If you've got any questions, you can feel free to type to the question box, and then I will answer them. Okay, I'm just going to start with this question from Lynn. Okay, Lynn asks about how about Wilma, right? Sorry, I did not provide any chart on Wilma now, but to my memory, there has been some buying on the on smart money buying on Wilma a couple of weeks ago. So last week there's some selling, but all in all, it looks like there's chance for Wilma to go higher. So I'll probably be waiting for more confirmation. But in fact, Wilma is well, I think Wilma is in my buy watch list, right? So in the weekly smart money report, apart from showing the charts of the various stocks, and I also will create a watch list for my clients to follow. So meaning in this watch list, I will indicate stocks that the smart investor the smart money buying. So for clients who are interested, they can then also put these stocks into their watch list and watch out for the daily charts for some trading signals, or they can also go and study the charts further on their fundamental data. Okay, so I hope you answer your question. But Lynn, if you have downloaded my this smart money report that I shown just now, I flashed just now on the QR code, you can actually flip through and you will see the Wilma chart there, right? Next question is my coaching free? Yes, it's free. Yes, we do have. And another question is there any demo account to try on? Yes, we do have a demo account. Later, I'll show you a QR code whereby you can scan to register for our Nova demo account. Is there any maintenance fee to open a trading account? No, there's no maintenance fee. The only fee will be when you start trading. So if you open an account, you do not trade, there is no fee on it. The question from Hun Kai: Why is Seatrium share price tanking recently? Chances of recovery? Um, I don't. Frankly, I haven't come across any particular reason, but for Seatrium, really the company is not profitable yet, lah. So it's a much speculative play, and the uh, the smart money flow into and out of the stock is actually at quite a high magnitude in comparison to the market cap. So like that during a given period of time, let's say maybe a 1 year period, the money flow into or out of the stock can be up to 10% of the market cap, which is pretty high. For most of the stock I see is usually in a single digit percentage. And just now, as I showed you on the first slides on Samcorp, you can see that a 600 million buy-up in the stock actually resulted in a 6x movement in the stock price. So there is some kind of a leverage factor, and that really also will voice down to uh, the, um, the free float of the stock. So because the market cap is actually not a really good look, lah, the free float is a more better gauge. Because if the free float out there, let's say, is only 1 billion, the market cap of the free float is 1 billion, and the smart money bought up 500 million. So that is almost half of the free float, lah. So of course, there is some the magnifying effect in the buying and selling down the stock, especially if the stock has a very low free float. But I will say that I do notice that not just Citron, but the other oil and gas play is not doing that well for the past couple of days, like Rex and all the other smaller stocks. But the other smaller one, I actually are more interested in Rex than the rest. So right now, personally, I'm looking at Citron and Rex. From the smart money chart, I do think that there's still opportunity. um, the US is going back into drilling oil, so which actually is what Citron do best, lah, building of oil rigs. Now, of course, the tariffs and the tax and all this may be a factor that may hinder it. So we will not know. So we shall see. But as of now, smart money looks to be still on more on the buying trend. So I will pay attention to these two stocks. Yeah, so sorry, your chances of whether there is a chance of recovery. Personally, I do think there's chance of recovery for Citrium. Okay, Jerry asked about Yang Zhejiang. Um, okay, similarly, you can refer to the if you have downloaded the weekly smart money chart that I provided, the QR code just now, you can look at it. The Yang Zhejiang chart is there. You can see that for almost 1 to 2 years, smart money had been buying very consistently on Yang Zhejiang. But of course, the sell down is only just recently, 2 days ago. I do not actually know. I will need to wait for next week, next week, 1 week for the data to compile, and then to see whether is it a valid sell down, or is it actually an opportunities, as in the sell down result actually has more smart money buying. If that's the case, then I think that the sell down is an opportunity. But if the sell down shows that the smart money is selling down a lot, then they'll be more careful. Right. The reason you can actually today the Straits Times has the news come out on Yang Zhejiang why it tanked so badly is really because of the US. They decide to tax those ships that is built out from China. Yeah, so that's the reason. Okay, Kwek Peng asks Singtel at current price still can enter. I really can't say much about the price. All I can say is that it looks to me that the smart money is still buying. So yeah, so it looks to me that there's still opportunity. So of course, to better improve your odds, then I would suggest that you look at the daily chart, try to pick up a support level, and try to buy near the support level that you are comfortable with. And then if anything goes wrong, then at least if you have to cut loss, your loss wouldn't be too painful for you. Okay, so I hope I've answered all your questions. So if you have any further questions, please feel free to drop me a line on the email, and then yeah, or you can just sign up, register for my one-on-one coaching. So for those who are interested in the demo account, you can scan the QR code here on the left. If you're interested for more of our upcoming webinars, you can scan the QR code in the middle. If you want to open an account, I can scan the QR code on the right. Okay, sorry, let me just go back to this again. Okay, that's all time we have today. Thank you so much for being a wonderful audience. I've overrun by a bit, and thank you for being still around. A link to the recording for this webinar will be made available for our follow-up email tomorrow. If you have any query on the webinar or you would like to get started, you can simply reply to our email and we will get in touch with you. And thank you for attending. We appreciate you for joining our webinar. If you found this session valuable and useful, we would like to hear your feedback. And please take a moment to leave a 5-star Google review by scanning this QR code on the screen. Your feedback will help us improve and reach out to more professionals, investors, or investors like yourself. And don't forget to mention my name and then if you and what you'd like to hear more from us. Right, that would mean a lot. This is Eric signing off, wishing you live long and prosper.